investing trends and what the top team at Motilal Oswal is sort of looking at. We have Prateek Oswal, CEO of Motilal Oswal Asset Management with us, as well as Niket Shah, CIO. Thank you, gentlemen, so much for dropping into our studios. Good time because, you know, it's a pretty hot day to be talking mutual funds because of the reasons that I mentioned. But Prateek, you tell us, I mean, several changes as well at Motilal Oswal AMC. How do things look from your vantage point?
No, so, you know, when we came in, we said things are good, getting better by the day. So, we now have a very good product. Performance has kicked in. Most of our funds are looking good. And I think we are seeing very strong distribution support now as we go forward. So, monthly numbers are in. I think people would be pleasantly surprised when they see our numbers.
And this is despite the whole KYC issue, because that seems to be the big elephant in the room. How significant is that?
No, so for an existing AMC, it is less of an issue. For a new AMC, new investor, it is more of an issue. We did see some delays in onboarding for sure, but in spite of that, I think we had a growth month on month in April over March, and April was our peak month actually.
Oh, okay. So we'll have to see that in the numbers as well, what happens for the industry, because there have been a lot of conversations. Niket, let me come to you. Let's understand what's happening in the markets right now. We've seen some weakness in the last couple of trading sessions. Earnings are coming in thick and fast. What have you made of the earnings so far? And what are markets factoring in right now? We do have that big election result which will come out. Do you think there is some fear or some nervousness ahead of that?
So I think as far as earnings are concerned, earnings have been broadly in line with our expectation. We are seeing about 10-12% earnings growth for most of the Nifty companies. For mid-cap, it's been slightly higher. But if you compare that with what has actually happened in the last 3 years, we have seen an average of about 23-24% kind of earnings growth for the large cap names. So as compared to that, we have seen some moderation in earnings growth. And to that extent, we are seeing consolidation right now in markets. Similarly, for mid-caps, we have seen more than 34% kind of earnings growth in the last 3 years. And now we are seeing more of a moderation to closer to about 18-20% kind of earnings growth. So while valuation appears to be on the higher side, that's primarily due to higher growth that we've seen in the last few years. On the markets, I think election is anyone's guess. We don't guess how election outcomes will be. But I think obviously markets have factored in, you know, the existing government will come hopefully. That is being factored by the markets to a larger extent. And I think we should all wait for the 4th June results to come out. And I think once the clarity really emerges, I think that will really set the trend for the markets going forward.
You know, so given that we are still awaiting clarity on this big one event, Niket, the question is in terms of portfolio positioning, incremental buying is an issue because investors today know that if there is a dip, you have to go in and invest. It becomes easy. The tough part is to buy when the market is not giving you more than 3.5% of a decline from the top. And that's been the case for over a year now.
Right.
So how are you navigating this then?
So I think we identify a lot of newer themes every year. If you look at in the last 3 years, you know, the reason why most of our funds have done extremely well, because every year we've been lucky enough to get a couple of themes playing out for us. And we've been ahead of the curve, you know, before the theme really starts playing out. While the theme really plays out, is also very important. What stock do you really buy within that theme? Right. So, for example, if mid-cap IT has to do much better, what exactly within mid-cap IT you really buy really makes a difference, right?
You think that's one theme?
That's one theme.
Mid-cap IT?
Yeah, mid-cap IT is obviously played out last year. We were excited about real estate last year. That's played out as well. This year we are excited about telecom, and we are overweight on telecom. So it's important that you identify the right theme, be positioned ahead of the curve, and let's see how it really plans out over the next 1 or 2 years.
Okay. Prateek, I want to come to you because you've given a list of potential leaders of the current market cycle. There are a couple of themes that you're looking at, be it healthcare ecosystem, financialization, China plus one. You spoke about tech, make in India, urbanization and telecom. Yeah. So there are a number of themes here. But tell me, what would the portfolio construct look like in that case? Will the entire portfolio focus on these themes? What does it mean in terms of valuations? Because some of them are at high valuations.
So now he is the guy who is doing it, so I will give it to him. But I will just say one thing, you know, and people will understand. So in 1997, for example, India saw software as an industry which then from nothing is now 10% of GDP. In the same manner, over last 1 or 2 years, we have seen 3-4 new industries come up. It doesn't happen all the while. Otherwise, you have the same industry who may grow a tad more, tad less, but this is the change. There were no EVs 3 years back. There were no EMS then, electronic manufacturing. Nobody was talking of renewable power, for example. So this is not only what India wants, most of this is what globe wants. And are hence multi-year growth themes. You're starting from scratch. Plus the biggest difference is, you look at earnings, how they were large cap, mid cap, small cap. 8 to 21, you did not have an instance where mid and small earnings grew as an index for 3 years. There is only one instance of 2 years of increase. Otherwise, it is 1 year increase, 2 year down. Now you are getting 4 years of earnings increase, mid and small doing better than large. And reverse globalization is a huge part of it. So till it continues, I think this continues. So those are the big thoughts. We are growth focused investors. We develop themes to find spaces where growth can continue for a longer period of time, and then want managers to spot businesses which can have a higher growth quotient where valuations make sense. And we built it. But after that, let me have him develop it.
So I think the interesting part in this cycle is the market has been extremely broader. If you look at the winners of 2010 to 2020 are not the winners of 2020 to 2025, right? So you have new winners and new sectors playing a role in the economy every 5-year period. I think we all have to identify that much earlier, and positions ourselves much better. So I think the markets have become much more broader. Who thought in 2020 that rail and defense stocks will do so well? They've been the biggest winners versus the traditional sectors that we all were used to. So I think that clearly shows that the bull market is live and kicking.
Okay. What's your stance? You mentioned rail. What's your stance on PSUs? The poster boy of the the bull market over the last 1 year.
So I think within PSUs per se, I think defense have done really well, and that's really driven by earnings growth, right? While most of the PSUs, apart from defense, have not seen material increase in earnings growth, right? I mean, prices have really gone off the roof, but there's not been material earnings growth. In fact, some companies within PSU have seen earnings decline, and yet the stock price have been up. So we've loved to avoid them.
You're cautious. I remember I had the good fortune of sitting down with Ramdev ji a couple of weeks back, and we were having a longer conversation. And I know that the capital market space, I think right now, is something that he is the most bullish on, and not from a year or 2 year perspective, but I mean multi-year bull cycles. But let me ask you, because now you're the stock picker here. That's a theme. But in terms of mapping expectation with reality, with stock valuations, because stocks have also gone through the roof over here.
Right.
What do you make of it?
No, so I think if you look at capital market as a theme, there are brokers which you can play. And then there are, other ways of playing things like, registrars and all of that. Our view has always been that the best way to play is either digital brokers, where there's value migration from offline to online. So that's growing at a faster pace. The second is obviously the exchanges, where some of the exchanges have really seen material amount of market share gain on the option side. And again, we as a house were far earlier in that traction that we've generally seen. So I think that is the two areas where we have essentially spotted as far as capital market is concerned, capital market theme is concerned. And our sense is that this is going to continue till the time you don't see a material shock in the system. So this will keep continuing, because I think the experience of what people have, I mean, any investor who've come in last 3 years have generally made reasonable amount of wealth, provided he's an investor and not a trader.
Okay,
So
yes,
let me
please.
add a bit there. People should remember we are a country of 140 crore of us. Slowly, we have 10% of us in the market. Slowly, that number will expand. So our markets will be most deep, most liquid versus any other markets globally, maybe X of China. And this is just the beginning. If you look at trends like equity ownership, it is still one of the lowest. I mean, forget US, it is lower than Thailand and Malaysia. So as the per capitas increase, participation would increase, and the whole ecosystem benefits. People who have pricing power and the ability to gain market share are better positioned.
Okay. As you pointed out in the report as well, India's penetration of demat accounts is just 8% versus 65% in the US and 15% in China. So big headroom that we have here. One of the themes is China plus one, Niket, and I want to delve deeper into it, especially chemicals, because I track this space closely, so I want to understand that. Do you really think this theme is working? Because in last 1 year, all we have heard is China dumping goods, all of the globe facing that issue, realizations being lower, demand being hit. Do you think this is a theme that people can still talk about?
So I think you have to keep in mind that every industry goes through a cycle, right? Chemical has seen like 7-8 years of a dream run, right? And obviously after COVID, we did see significant amount of inventory buildup at the client's end in US and as well as in Europe. Some of that is now getting more rationalized. But our sense is that maybe a couple of quarters down the line, you will see growth coming back for most of the chemical names.
Do you think that for textiles as well? Because a lot of the manufacturing has moved to the likes of Vietnam and Bangladesh. Do you think India is seeing some sort of setback here, or this theme will work in future?
So within textile, again, you have to bisect and dissect. So if you look at garmenting, I think they continue to do very well. But if you look at within fabrics or within the traditional textile names, we haven't seen any material growth because domestic textile continues to remain slightly more weaker from a consumption standpoint. So anyone within textile who is focused on export opportunities, I think continue to do very well, at least for the next 2 to 3 years. And our sense is that while within China plus one, I think the best way to play is chemicals, primarily because while China plus one really plays out, it's also Europe plus one which really plays out there.
Okay, so, any final thoughts? I'm just going to recap for the benefit of our viewers. Key themes. I remember you saying mid-cap IT, telecom is something that you're looking at. Capital markets is a space. Am I missing anything, Niket?
No, so I think capital markets, telecom is the newest one, so it's much more live and fresh.
Okay.
Real estate, capital goods, and mid-cap
India.
IT, and make in India. Yeah.
Okay, got that. All right, gentlemen, thank you very much. Lots of food for thought.
Thank you so much.
Thank you.
Okay, all right. With that, we'll do one thing. We'll slip into a short break. But with that, it's now time to shine a spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.